Hello again, everybody. Doing here from the RFX Forex and Trading. New Zealand Swiss franc daily chart. Well, the market has given us a U-turn bull candle signal, which is also known as a morning star, to indicate the start of a possible rally towards the resistance boundary of this pennant setup. Now, even though this could lead to a bullish movement over the next couple of days, given the fact that this is a strong signal by itself, I'm a little bit concerned that it may not actually lead to that movement because within the context of this consolidation setup, and given the size of this consolidation setup, it's somewhat of an ordinary signal relative to what we would expect for this type of setup. So it is possible that instead of rallying, the market could pull back and possibly form another type of setup or another type of signal before actually rallying. Now, what I would prefer is something like this, where the U-turn that takes place is a little bit wider compared to what we're seeing here. Now, even though you can point out the fact that the market had a very sharp U-turn here that also led to a sharp movement, this I think is the exception rather than the rule in terms of what to expect with these types of setups of this size. So my preference is generally when it comes to these consolidation setups that we have a slightly deeper U-turn, slightly wider U-turn before the market actually gives us the bullish or bearish candlestick signal. So that is why my preference, based on what I've seen over the years in terms of the types of signals that the market responds to with these size pennants, um, is that is that they generally tend to respond to signals that are given that have a deeper U-turn, especially when it comes to these types of morning star consolidation, morning star signals. So, as you know, with morning stars, they do not necessarily have to have just one small candle in between the bearish and the bullish signal. We can have one, two, or maybe even three indecision small candles in between the bearish and the bullish signal. So I think that the wider the distance between the bearish and the bullish candle is, the stronger the signal and the greater the chance that it will actually lead to a movement towards the other side of the boundary. Now, taking a look at the 4-hour chart, you can see that the market has clearly started to rally on this time frame as well. And if the daily signal that we just saw was something that was more along the lines of what I explained in terms of my preferred type of signal, then entry could possibly take place where we are now, with a stop loss placed below the low of this U-turn. But given my concern, I would not be trading this right now. I'd actually prefer the market to, having given us a signal, possibly move sideways for a little bit and then give another bullish signal. But perhaps by that time it will be too late in terms of a trading opportunity, because let's see, at 71.36, not much room in terms of being able to capture a minimum target of 100 pips. So this might be a wave that we will have to ignore because of the low chance of actually getting a strong trading gain. Another possibility is that instead of rallying in response to this signal, the market could pull back a little bit, perhaps pull back and then form a double bottom formation with an equally strong bullish candlestick signal at this area here. So that is my take on this currency pair. Bullish candlestick signal has been given at the support boundary, which could lead to a rally over the next couple of days that takes us to the resistance boundary. But based on what I've seen over the years with currency pairs and the types of signals that the market responds to when it comes to movements within consolidations of this size, it is there's a strong possibility. I was waiting until that truck passed outside there. There's a strong possibility that the market may not respond to the signal and may actually pull back before providing us with another type of signal. If it does rally, then it could be one of those instances in which we just had to forego it and move on. But it is also possible that while it is moving, it becomes volatile as it heads towards the resistance boundary. That's another thing that the market tends to do when it gives us a signal that is not the strongest. It may still head towards the other side of the boundary, but because of the relative weakness of that signal given, there might not be enough of a momentum to carry towards that target with a stable set of setups and signals that we can trade. So along the way, you will see a lot of weak setups and a lot of volatility, a lot of pullbacks and sideways movement that can make trading that type of movement very risky. So that's my take on it, and so we're gonna see how this actually works out over the next couple of days.